Welcome, folks, to Pro Trader Strategies Market Commentary for Friday, June the 4th. My name is Eric Wilkinson, and some of you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those all come in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these daily market commentaries, but I'm also going to talk about these option strategies I'm implementing into my portfolio based on the assumptions I come up with in my market analysis. And we've streamlined that process for you guys to spot the optimal option strategy for any given assumption. We look at the pricing of the option. That tells us if they're expensive or cheap. And then we find our option strategy from that. And I show you how to follow that roadmap in our market or in our webinars. And you can check those out for the swing trades. We're doing those right now, ramping up into bearish moves. So you can find those out, and we'll show you how to optimize those prices for better probabilities. All right, so let's get on with the economic data. I got a little long-winded there. Sorry about that. Yesterday, something we didn't have a chance to talk about was the crude oil inventories coming in higher than, a drawdown more than expected, which means that should drive prices higher. We have lack of supply, more demand coming in at negative 5 million barrels, expected to be a negative 1 million barrels. So a big miss on that, meaning prices should be driving higher. And if we look over at the markets right now, we can see that we are seeing crude oil start to make a little bit of a move to the upside here, almost testing that $70 a barrel mark here. As you can see here, 69.76 printed earlier this morning. It is losing a little bit of steam as of right now, but the data that we got today should reinvigorate some of this bullish move here in crude oil, because we're seeing our economic data here in the United States in the form of the non-farm payroll number, which is the most important data point we look at for the year. The non-farm employment change coming in at 559,000 hires. That was about 100,000 less than what was expected. But the headline number everybody's going to be looking at probably is the unemployment rate. That downtick to 5.8% from last reading we got at 6.1, you remember? So this is the lowest reading we've seen since the pandemic started. So nice to see we're stepping towards that. Like to see some more employment change, but as we see some of these unemployment benefits start falling off, the extra $300 that some of these folks were getting, that's going to start falling off. That should incentivize them to start looking for a job. So we could start seeing that number uptick, because the labor force participation rate was downticking a little bit, and that's a little bit concerning now. And that's about it for the economic data. So let's get on with the markets. We've got, like I said, crude oil marching a little bit higher today, a little bit off the highs of the day. Now, Bitcoin, we're seeing some weakness here as the dollar is weakening. And that's another thing that's going to give crude oil a little bit of a boost also, is that weakening dollar, because anything that's dollar denominated should see some strength. And Bitcoin, I say it's dollar denominated, but it's seeing weakness. Why? Well, our boy Elon Musk, who has been the big champion of Bitcoin, tweeted something out today. It looked like maybe they're breaking up or something. That caused a little bit of angst when you start seeing those billionaires dump this. Well, I think that's a little bit of the catalyst of the pullback here. They are all out there on the Twitterverse and on Wall Street Bets trying to get the apes back in the game. And remember, the apes are who is following the Wall Street Bets guys. So those apes are trying to rally the troops to get this buying frenzy back on. Now, we're looking at gold futures right now. They're moving up towards that 1900 psychological level. The real number line in the sand is that 1923. That's the high from the financial crisis in 2011, when we really started seeing inflation ramp up, and the expectation of future inflation was really driving gold prices higher. We're starting to see that come back now, where a lot of people are worried that this whole transitory inflationary aspect of the economy that the Fed is talking about may not be so transitory at all. And that's giving us a little bit of a boost here in gold futures right now. Bonds up over a point on the day, back to the point of control. Something to note here, one of the first times we've seen the 159 handle for the interest rate on the bond. So that is a low level that we haven't seen in quite some time. I think that we are going to kind of pause out here right in and around this point of control, and we should see the time node, which is still elevated up here in the 172 handle, drop down here to the 157. As you can see, we've already encompassed that with volume, meaning people are buying bonds at these levels and trading. As the time starts building up, we should see that shift down, and that is acceptance at lower levels and very bearish. All right, VIX coming off today as the equities are celebrating the economic data, I guess, and making a nice move to the upside. You can see a complete retracement of what we saw yesterday in the markets, with the NASDAQ up 230 points. E-mini S&Ps are positive as well. We're looking at the Dow Jones Industrial Average up 100 points above yesterday's high, very bullish. Again, here, E-mini S&Ps 25 points on the day and near the highs of the day. You can see just a rip to the upside off of the overseas economic data. We also heard Lagarde speaking earlier. That gave a little bit of a boost. Then Powell followed it up. All of those guys really giving some momentum to the upside here, and very close to the highs of the E-mini S&Ps that we saw earlier this week. So a lot of strength in the equities. I would say risk across the board right now is to the upside. I'm not so much talking about Bitcoin. That's a little bit of a dicey move there. But with the weakening dollar, that should give strength to gold. Oil, I think that there's the demand there to support that move to the upside and test 70. And I think that the equities across the board, we've been seeing pretty good economic data across the, and we're seeing good earnings results coming out. Forward guidance, which we haven't been seeing, very good forward guidance coming out of these companies. They're starting to give a little bit more insight into forward guidance, which is giving confidence also to this rally here in the equities. As for my overall portfolio, I added a couple of negative deltas yesterday that when I fell on my face and kind of screwed up the daily market commentary for you folks, I wasn't able to talk about. But something that I did add negative deltas to in my portfolio is in XOP here. Ford making massive highs here. XOP is something that I was looking at for a bearish move. Now you can see crude oil still moving to the upside, but I talked about this when I was setting this trade up, especially yesterday in the webinar where I really drilled down on this trade. So please check that out. But one of the things we're noticing here is the loss of momentum today. We've got a big engulfing red candle here on XOP. Let me see if I can figure out how to pull up my pen real quick and see how quickly I can do it. It looked like that was pretty quick. I'll go with that. Anyway, we got this pattern up here at the top with this big red engulfing pattern. That is a very bearish signal. We also have this pattern right there. Right before it, those last two patterns, we had a bit of a hangman doji, and then we've got a shooting star doji right next to it. So we're talking about these three right in a row where we've stayed in the same range there. We've got a hangman doji, then a shooting star doji, and then a bearish engulfing cloud. All of those things are in and of themselves bearish, but now we have them all lined up. That, to me, next week is going to be looking to roll over. So with that said, remember, I bought the puts, the long duration. I'm trying to limit that theta decay, folks. So that's why I go out into the September for these. With over 100 days to expiration, that theta decay is almost non-existent. And I paid $5.50 for those. Looking for a pullback, at least down to about the 50-day simple moving average, which is the target I'm looking for there on a bit of a pullback here in XOP. And the other things that I added some negative deltas to my portfolio was in Pepsi, still writing those out, and trying to think of the Pepsi one was for this same webinar where we did the long put spread on Pepsi. So all of those trades are still working out, adding negative deltas to my portfolio. Snap, not so much. Snap, we're working on trying to get Snap moving. So let's see if I can get over to Snap. Did that work? Still working out the kinks here. We're trying to figure out the get back out of my pen and into my mouse. There we go. All right, so let's see if I can get this back to Snap, because Snap is kind of one of those stocks that we were looking at and trying to get this thing to sell off, but we settled up above the Fibonacci there, which I was hoping to get a little bit more weakness here and fall to the downside, but we are, let me see if I can get rid of this ink now. And do the eraser, see if that works. All right, so we got, I'm gonna have to do that every time, I guess. All right, but this settlement did not quite make it below our 78 Fibonacci. I was hoping to get that, just a settlement slightly above that. Right now, we've got a pause. We're in inside day, so I'm not overly concerned about this trade at this point. But we start making any moves to the upside, I'm gonna have a quick trigger finger on this one to pull out of that. But at this point, those are the ones that I've added some negative deltas. That's a hedge to my overall long portfolio. That's what I try to do with these, is in case we get these pullbacks, I can take advantage of it when I have those negative deltas in my portfolio. All right. I hope everybody has a great weekend. That's all I got for you guys. Other than, please smash that like button. It really does help us out. And let me know what you guys look for in a swing trade setup. That's something I would love to talk to you guys about. I have my little ones that I love to look for. Please let me know down there in the comment section what you think is one of those most important candles to look for on a trend reversal or a pattern change. All right. Love to hear from you. Like I said, take a moment to smash that like button or take that. All right. Bye for now and take it easy.